Except for a brief lull period and execution issues during the second wave of COVID-19, companies in the railway engineering space continue to witness strong traction in execution, leading to higher growth in earnings and better margins. While the flow of fresh orders is still lacking, improving execution, good pickup in exports, easing labor and other issues like logistics and availability of equipment, etc. are a good indication of future visibility. We analyzed September quarter results and management commentary of three leading PSU railway engineering companies, RITES, IRCON International and RVNL. On an aggregate basis, the three companies have reported strong 35% YOY growth in revenue in Q2 FY22. Even compared to June quarter, revenues improved by almost 18% as a result of higher execution and orders in hand. Both domestic and international markets have picked up swiftly in the second quarter of the current fiscal. RITES, which reported a strong 72% year-on-year revenue growth in September quarter, highlighted that this year it intends to book close to 700 to 750 crores of revenue from exports out of its current export order of 1,000 crores. It also indicated that the pace of export order execution has improved significantly and the company has already achieved close to 330 crores worth revenue from export markets in the first half of this fiscal. Strong growth in revenue also helped these companies absorb part of the input cost pressure led by higher commodity prices. On aggregate basis, margins came in at 9.2%, improving by almost 70 basis points on a YOY basis. This was largely because of higher scale. Companies, however, remain cautious about the margins as part of the input cost pressure could spill over to the third quarter and therefore margins could be slightly lower even though scale of revenue could improve because of higher execution. Among the important developments that impacted the sentiment, the Ministry of Railways will no longer award projects on a nomination basis. The PSUs in this space will have to compete with private players and bag orders through competitive bidding. While this is negative for these companies, they're confident and ready for the new era on the back of their expertise, resources, strong balance sheet, and lean operations. Companies like IRCON International have already emerged the L1 bidder in one of the projects in Sri Lanka worth $15.5 million and L1 bidder in two other domestic projects pertaining to high-speed railways worth 8,500 crores. This suggests that it is not that these companies only have projects based on nominations. IRCON, for instance, has close to 30% of its current order book won through competitive bidding. IRCON, in fact, is eyeing close to 10,000 crores of orders from competitive bidding itself. Even if a few orders are diverted to private players, the good news is that the export market has opened up good opportunity to load fresh orders. IRCON is eyeing new orders from Myanmar and Bangladesh. On top of that, most of these companies are sitting on strong orders which are good enough to support growth for next 3-4 years. On a cumulative basis, these three PSUs have an order book to the tune of about 1.16 lakh crores, which is over 5 times their annual revenue. Our preferred stocks, IRCON International and RITES, continue to trade at attractive valuations. Both are currently trading at 9 to 10 times their FY22 estimated earnings, which is attractive given the strong order book, cash on the books, and good earnings visibility over the next 2 years. Moreover, the stocks offer close to 5 to 6% dividend yield at the current market price.